Gold's record run, a clear signal of market anxiety. Gold prices have surged to record highs, sending a strong message about the state of global markets. While the rally may look like a simple flight to safety, it actually reflects a combination of deeper concerns about the U.S. Federal Reserve, political gridlock in Washington, and uncertainty surrounding corporate earnings. 1. Federal Reserve uncertainty. The Federal Reserve has been at the center of investor anxiety for months. Despite signs that inflation is cooling, the Fed has kept interest rates elevated, and markets remain unsure how long this policy will last. A lower-than-expected inflation reading in the upcoming PCE index could push the Fed closer to easing. But if inflation remains sticky, the central bank may keep rates high for longer, which clouds the outlook for both growth and corporate profitability. 2. Fiscal gridlock in Washington. Another factor driving gold's rise is the political stalemate over U.S. government funding. With lawmakers unable to reach a consensus on budget measures, fears of a government shutdown are back on the table. Each time Washington edges closer to a fiscal cliff, investor confidence takes a hit, and the appeal of safe haven assets like gold rises. 3. Corporate earnings pressure. The upcoming earnings season adds another layer of uncertainty. Companies are under strain from multiple sides: weaker consumer demand, labor market pressures, and global trade disruptions. While some firms may surprise with resilience, the overall outlook is fragile. Any widespread disappointment could spark a fresh wave of market volatility. 4. Why gold is shining. Gold thrives when uncertainty dominates. Unlike stocks and bonds, its value is not tied to dividends or interest payments, making it especially attractive when growth looks shaky and central banks remain unpredictable. The current surge is not only about hedging against inflation, it is also about hedging against systemic risk. Conclusion: what comes next? The record run in gold is more than a headline, it is a warning signal. Investors are bracing for a complicated mix of economic and political risks. If inflation data softens and U.S. leaders avert a shutdown, confidence may return to equities. But if gridlock worsens and earnings disappoint, the gold rally could accelerate further. For now, one thing is clear: the flight to safety is on, and gold is the destination of choice.